Well, I think investors probably react by still reducing their exposure to the sector. I think we've seen the sector already underperforming meaningfully over the last months, year to date, the last 12 months, with tariffs one of the drivers for that. But we've got no confirmation that for automakers there will be a substantial hit, with some of the OEMs, notably Porsche, AG, Stellantis, or Volvo cars most affected. But also names like Mercedes, BMW, or Volkswagen impacted. So we only have really one automaker that is immune to these tariff news, which is Renault, because they have no direct exposure to the space, but everybody else is. The only one that has already reacted is Ferrari, that we actually upgraded to buy last week on their new commercial policy. They have a very specific pricing power that allows them to pass on a decent portion of these tariffs to their customers. But for everybody else, we are going to have to wait a little to see how they react, what they decide to digest, and what they decided to pass to consumers, with possible impact and likely impact on affordability and therefore demand in the US.
But Thomas, when I look at these amazing companies, and they are struggling, but they're amazing companies creating amazing products, they all have large operations stateside. They all pride themselves, from Mercedes-Benz and the others, for manufacturing stateside. How come none of this, and these investments made over the last few years especially, has actually moved the needle on their exposure and how investors are reacting today?
Well, I think you have companies like Mercedes or BMW that have very large factories in the US, but the auto industry has historically specialized factories. So the US typically were the place where German automakers started building their large SUVs. There has been some issues, obviously, with China-US trade that have already induced some changes. But none of the automakers is today able to produce every car they sell locally. So you still have a lot of trades happening between Europe and the US, between Mexico or Canada and the US. And that's why you see still these big impacts today. So I think most of the automakers are going to try to increase their flexibility and their ability to be increasingly locally sourced with the deglobalization happening. But this is a long phenomena happening, I think, and time in the auto space is always very long. And I think for all of these companies, automakers or suppliers, there are clear questions on whether they should invest more in the US today, or whether this is a temporary situation that could change over the coming weeks or coming months, notably regarding the USMCA organization. So that's where clarity is most needed for the industry.
Thomas, in the meantime, do you see more US-badged cars on the road, that it's going to be a big sort of fleet of American cars traveling around the States?
Well, I think one of the issues we see is the increase in car prices. So the increase in car prices is going to put more stress on demand. So we were seeing the US market in the low 16 million SAR. It could fall somewhere between 14.5 and 15 million. Clearly, the interest rates are likely to stay relatively high. Car prices are likely to rise. So we were hoping that you'd have a declining monthly cost for consumers that would allow higher demand overall. Now this is not going to happen. I mean, there will be a benefit for car makers that are able to build cars in the US, and some of the Detroit 3 might be tempted to increase their production in the US to have vehicles escaping these taxes. And you're right, there's probably going to be some benefits for vehicles produced in the US. Some of the car makers have also already announced that they would not raise prices, like Toyota or Hyundai, to try to preserve their business in a market that is likely to shrink.